Mark Selby. How are you, sir?
Mr. Matthew Gordon doing very well.
Glad to hear it. Good Easter break.
I did actually got some good
Yeah,
downtime. Yeah, no, it's
nice.
it's one of those holidays that actually everything does shut down for a couple of days. So yeah, no, it was good to get a little downtime.
Yeah. Do you guys? What happens in Canada Easter? Do you get hunting Easter eggs? Is that a thing, or do you hunt the puck? I don't
There's
know.
sometimes Easter egg. We get chocolate as kids.
Chocolate.
Yeah.
Okay.
Well, if your parents are, they organize an Easter hunt. If they're not so energetic, they just leave the chocolate on your bed when you wake up in the morning. So
Fantastic. Let's just start with
yeah,
diabetes too. Let's go with it.
exactly.
Stars me to go on. Right, we're gonna talk about nickel. It's been a tumultuous period. Tariffs have been affecting all of the markets. What's it doing for nickel?
Yeah. So shortly after we talked last time, Trump then reversed the Liberation Day tariffs, and nickel had sold all the way down to about $14,000 a ton, and we're now this morning back up to about 15,750. So we've made up more than about 2/3 of the $2,800 a ton range that we lost when the tariffs were announced. What I think is constructive is the way sort of, again, the whole supply chain, into the nickel market reacted. So again, we saw, ore prices, NPI prices, stainless steel prices come off a little bit right after the announcement. But, what was interesting was you really, ore prices that have, came off, but are actually trading higher than where they were, pre-announcement. So, one, in terms of Indonesia, you had the end of Ramadan with the Eid holiday, which is the biggest holiday in the Islamic world. You had inventories low already. Again, they got squeezed last year, and some have restocked, some haven't restocked nearly as much. But and then when the Philippine rainy season stops, right, it takes a while for the supply chain to get refilled. So what was interesting was we've now seen ore prices, as of last Friday, pop back up to the highest level, since October 2023. So higher than even where they had popped up to last year. So that's a good sign that overall, ore tightness is that 1.5% Philippine benchmark was squeezed, and we've seen Indonesian ore prices move higher. What was also good in terms of, good sign as a bottom was that you saw that sell off. You saw, Shanghai inventories come off fairly dramatically. So you did see a bunch of nickel get delivered into the LME, but you did see some inventory piles get reduced pretty sharply. So I think we were back in the range that we were for 3 or 4 months at the start of the year, but I think the next month or so will be quite telling in terms of whether we climb back up to the 16,500 level. What we saw just before tariffs, and again, I think with this ore price push, we should see, still believe we should see prices get back up towards the 20,000 level by year end.
How does it do that? Obviously, price rebounded off of the kind of Liberation Day lows of 14,000 to get back up to, and obviously bounce back to, like, for say 1560, 15,650, as you say, but to get to 20,000, that feels like a big leap. I mean, it's going to be a huge demand drive to kind of get there. So some of these things may affect that, but it doesn't need to be some kind of massive response. And where's it come from?
Yeah, we still have a long way to go to get to that kind of, back up towards the $20,000 level. But, what really drives it this time, is effectively two things. One is you're going to see a big push in terms of ore prices, just really driving the cost of production up. And squeezing supply in the short term if NPI prices don't respond. But it really comes down to that, Indonesian government keeping their foot on the brake, wanting to see higher than lower prices in the market. So that's going to be, basically, 2/3 of it or more. And then the other piece of it is going to be, more demand from the EV sector, and then continued growth in stainless. Stainless in China has grown at double-digit rates through the first part of this year. That's crazy. That's even higher than what I was expecting. Inventories are high, but they haven't continued to go up from there. So, and that's much higher than most analysts were forecasting. So, so if we get this combination of Indonesian ore squeeze plus, continued strong demand from the stainless steel with a little bit of restocking and growth in the EV sector, then that sets the stage for us to get up towards that $20,000 a ton level.
Right, and it's kind of sticking with the kind of the tariff messaging. You've got the US has decided to, implement very large tariffs with the Chinese, and the Chinese, rather than folding, have said, no, thank you very much, and have started retaliating in their own way, and also advising others to retaliate and not be bullied. So, what will the Chinese do? We've seen how will the Chinese react when it comes to stainless steel, and all the kind of derivative metals which will benefit from this. Are they going to continue to engage with other countries? Will they be saying, well, actually, okay, US, you have to work out where you're going to get your supply from? Because as we've talked about in the past, China is the beneficial owner, effectively, of 70% of Indonesia's production. So it would be against their interest to stockpile, but can they affect the direction at which their products flow?
I think there would be some of that, but I don't think there is, because it's not necessarily a maximum leverage point for them. The U.S., again, the key sectors there are defense, aerospace, and so forth, which again tend to rely on more Western supply. That's there, and then the EV supply chain, right now starts in places like Korea to get to the U.S. So it's a little bit indirect. What we have seen from the U.S. is, again, more restrictions on rare earth materials, right? So that's very real, and I think that's one of the dimensions you're going to see them squeeze is some of these minor metals. In terms of nickel and stainless steel, obviously all of this economic uncertainty is slowing down business investment generally, but I think what we'll see, and I think this is part of what we've seen with the Chinese stainless so far, is that part of the way to offset some of this, sort of global slowdown is to do more infrastructure investment and so forth. So governments trying to stimulate their economies this way to offset any drag from global tariffs. And, nickel and stainless steel have this wonderful benefit of, because they play across, so much of, so many sectors of the economy. If you see a slowdown in one, then an increase in infrastructure investment is going to create additional stainless steel demand, that should be able to offset that's there. So I'm not too worried about overall stainless demand, through the remainder of this year.
Right. Okay. And so just talk to me again. You briefly mentioned that in terms of like sulfate prices, and how that's holding up against nickel prices more broadly. How's that a factor in, again, what we're seeing in terms of trade and tariffs?
Yeah. So in terms of when you see the downstream prices in terms of nickel sulfate prices and nickel pig iron prices, we saw nickel prices fall by 20% post tariff announcement, but we saw those prices for those products fall by about 5 to 8%, and they've already gone back up again. So we've been talking about this great convergence that's been happening for the last 3 years. We got down to the gap between NPI nickel prices down to only about 200 RMB per unit. That's widened back out to about 250, but that is lower than the sort of 300 RMB floor, and that 150 to 200 level is, I think, where we'll ultimately settle out on that point. And the fact that sulfate prices held up, if there was slack in that sector, because there was a lot of slack, a lot of inventory before, you would have seen prices easily come off by the same amount that nickel had. So the fact that sulfate prices only reacted by small amounts says that inventory levels throughout that chain, aren't particularly, are at a reasonable level right now, which is good.
Right. And just so selfishly looking at the kind of equities market, how in all of this do the kind of the Western nickel companies benefit? What again, what's the thing that's going to move the dial for them? What does the market need to say? What do the equities investors need to say?
Well, the big thing, just using Canada as an example, with the threat of Trump tariffs, where people have talked about, we need to take advantage of whatever strengths our economy has, number one. Number two, we need to create bargaining chips to be able to negotiate with Trump, to have some levers with which to deal with this administration. And so nickel and critical minerals like ours, are I think one of the few sectors is actually going to quote benefit from Trump being there. So we've talked about the various government programs that are there, and again, a number of those government programs will be there for when we get to those various financing stages. What was missing before was funding for this development stage, quote, the valley of death, in terms of where you've gone from PEA through to permits and feasibility study, and towards a construction decision. All of the signals, we've had 2 elections in jurisdictions here in Canada, and both sets of government have talked about more programs and moving the economy more quickly. So, I'm looking forward to the next couple months. Government sitting with the new Minister of Energy and Mines tomorrow. That we're going to see the pace of funding and the quantum of funding really make a big step change. So critical minerals, in all this Trump noise, Western critical minerals companies should be a big net beneficiary of everything that's going on.
And do you think critical minerals will all be treated equally? Like, if I'm a rare earths company and I score a deal with the US, okay, there'll be no tariffs on that because we need it. Do you think the Canadian government will behave like that? How would you feel if that did happen and it didn't happen for nickel? How do you expect things to play out on the critical minerals?
On the critical mineral side, so I think there's 2 levels. So one, there's chunky, critical minerals that are, large enough in scale that sort of moves the needle for the economy, and in terms of overall revenue dollar terms. And then there's kind of minor critical minerals where, people aren't going to be, so fired up about opening up a new gallium mine, right? Or a new mine that's got a lot of gallium associated with it, because, the gallium market's just not that big, in terms of total. So nickel qualifies, as one of the largest scale critical minerals. So, we'll benefit from that. And then in terms of tariffs, at the end of the day, it gives us, we have a lever with the government, with the U.S. government. But if the U.S. government is not rational, and we've seen that that's been the case multiple times, then that's fine. Because again, most of the critical minerals, if the U.S. is short of them, Europe is also short of them. So, whatever, and they tend to be high value enough that it's no issue. So that's shipping them to Europe, shipping them to the U.S., shipping them to Japan, shipping them to Korea, right? So, we've got a lot of market options. So, as I said, the critical mineral sector should be, one of the few sectors that is going to get some net benefit in the next 12 months from all this Trump noise.
Okay.
So.
Yeah, I think that's something to keep your eyes on. I think as equity investors, we're so keen to sort of see the things that are affecting us. And that's not to say that this period isn't creating some, huge opportunities. And in terms of, it's pretty cheap at the moment to kind of buy stocks into companies who, you can clearly see this sort of light of day. When the market comes back, they're kind of set up for success. I think for many, though, in terms of the chain explore codes, they're struggling to work out where the next dollar is going to come from to kind of fund their continued strategy. But for me, I'm looking at companies that I think have got a chance of making it, and maybe I'm buying these things for 40% discount at the moment. So I'm not complaining. Let me put it that way. Right, we better do a bit of company news. Should we start with the metals company? I mean, they've really seen a response in the market.
Yeah, their stocks crazy, good for them. So two pieces. So they've got a good U.S. lobby group. So number one, they've announced about 3 or 4 weeks ago that they're basically going to apply for their mining permits under a piece of existing U.S. legislation rather than wait for the Global Seabed Authority to come up with whatever the final regulations are. So that gives them a path to production relatively quickly. And then they were working with a series of some U.S. legislators who are looking to draft into legislation, looking at potentially even stockpiling, the manganese nodules to be able to, have a supply of them ready to go to process them going forward. So both of those things have, catapulted the share price up almost, I think, 3x in the last 3 or 4 months. So again, kudos to that team that's there. Again, I don't worry about it from a nickel supply perspective. They contain about 1.5% nickel, and they're, I think, about 30% manganese. And so, to get to any sizable quantity of nickel, you're really going to have an impact on the manganese market per se. So, again, good alternate supply. We have to see what the costs are, mining at several thousand meters from the ocean bottom, but good to see another source of critical minerals get going, and which is great. Another good chunk of news, Ardia, in terms of Australia. So they have the sort of the largest, I think, best undeveloped nickel laterite in Australia. So there's a series of laterites that were discovered back in the 60s and 70s, and they've gone through various development phases. This Kalgoorlie nickel project, they've got great partners in terms of Sumitomo Metal Mining and Mitsubishi. Sumitomo Metal Mining, is the one company that has successfully done laterites outside of China and Indonesia. And so, they're working through the feasibility study with that. So we'll see how that goes. They released a bunch of infill drilling to be able to get the feasibility study done. And again, some good grades, above average resource grades from some of the infill. So, that was good to see. Some other companies, you had First Atlantic Nickel. So they've got their aurorite deposit. So that's the similar to FPX. The key piece there is with Davis tube recoverable. So how much of the nickel is magnetically recoverable. So they had the test from their second hole and came up with a Davis tube recoverable grade of 0.11% and a bit of a bump in the final 20 meters up to about 0.15%. In terms of the overall recovery from the overall grade, again, the grade of these things is generally between 0.2 and 0.3. And they got 44%, to that rougher recovery. So again, a lot more metallurgy work to get there, but some interesting results, and we'll see how they continue to push that forward. The other one doing some infill drilling these days is Talon. So they're pushing forward on their feasibility study for their Tamarack deposit. In addition to they've got a farming agreement we talked about a few weeks ago with Lundin on their Michigan property. So again, nice good interval just outside the existing resource. So if they can expand the resource a little more, get a little more grade, that's always gravy in a feasibility study to see. And then the final piece of news this week, it was good to see. So Robert Yildirim, whose family has basically a big Turkish conglomerate. They had a number of interests in mining and processing, primarily focused historically on the chromium business. So we used to run into that group regularly at global ferroalloy conferences. He's now set up a separate business from the rest of the family, and one of their key focuses is on nickel. So the big story last week about looking to deploy a couple $2 billion of capital into the nickel sector. So we'll see how that growth goes. And again, good to see, good entrepreneur, good track record in the mining business. Making a good big bet on nickel. So
that's a big deal. That's a really big deal. Nickel's not dead, folks.
Yeah.
$2 billion.
Yes.
By someone who knows. Okay, well, Mark, good run through. Lot of stuff happening out there still. Markets are a little bit wonky, as you say, but as these things always tend to do, it'll level out soon. And my opinion, maybe now's the time to start picking up a few deals. Contrarian investing always makes you money in the long run.
Always.
Mark, see you next week.
See ya.